Today we'll be taking a look at the world's largest shipping company. It is Mærsk. It's a Danish company. You might have never heard of it before because it really doesn't get that much attention, and that also makes it a lot more undervalued. Today we'll be analyzing the company, so let's just get right into it. So first of all, what is Mærsk? Well, Mærsk is a shipping company. They have logistics businesses at sea and at land. They have these places where they ship from China and containers and all sorts of things. It's a old stock made by an old Danish dude, businessman, and yeah, it's a great business model, and they are really making some cash from this one. So now let's start from the top right here and take a look at the company. You can see already here inside Simply Wall Street, which helps us analyze these companies, because it can be kind of boring looking at these sheets right here, which we'll also be doing because we will get some information on there as well. But you can see it has a nice big snowflake right here, which means that it's generally has a lot of qualities. It's a nice value, it pays a nice dividends, it has a healthy balance sheet, and it has a great past performance. But why is it that they don't think it will grow a lot in the future? Well, we'll come to that in a second, and I'll tell you why that's not a big deal. So first of all, let's jump down to the valuation, because that is really where it's very interesting. Is this good value or not? So first of all, analysts believe that it is around 50% undervalued, and well, it has a PE ratio of 6.3 compared to the European shipping industry of 16.9. That is huge. It is below half the PE ratio, which means that it's great value. And if we take a look at Costco, I don't know if you've heard of Costco before, but Costco is also its main competitor, probably alongside another privately owned shipping company. Costco is this company, and it's also undervalued. The most important thing here is that we see that the Hong Kong shipping industry has a very low PE ratio, much lower than the European one, and that also suggests that this PE ratio should be lower, but it isn't. And here you can see there's a bigger difference, because we have 16, which is a high PE ratio, which means that if this company were laying at around a 15 PE ratio, we would still be happy for the stock, but it is even lower than Costco. Very nice PE ratio, first of all. Analysts forecast a 43.9% annual earnings growth, but that is a decline with a big minus before it right there. And why is this? Well, it's because the earnings has grown exponentially this past year, quarter, whatever you want to call it. If you take a look right here in the income statements right here, you can see quarterly revenue. So Q2 2020, it has grown 60%. And remember, this is not some kind of high growth Tesla stock that 10x's its growth every quarter. No, this is a good old humongous shipping company. This is kind of it is a well established value stock, and it's not often that you see a 60% year over year quarterly revenue growth. Basically, that is 1 year ago. What has it grown since then? And that is 60%. That is incredible. This company's normal revenue growth would maybe be like 2% a year in revenue. 60%, that is hilarious. And that is simply because of, the whole shipping industry has been clogged up because because of the pandemic. China has been like chilling with some holidays, and that has clogged up the system for months. And that just means that there's a lot more shipping to do right now. So you can see the quarterly earnings growth year over year. So 1 year ago, Q2 2020, we have grown around almost 800% since then. That is out of this world, and that is why it's not a big deal if this goes down 40% a year, which it probably will. It would be kind of weird if it didn't, because this crazy supply chain issue with this clocking of items will not be there forever. But that doesn't mean that this stock, it's not the only reason for the low PE ratio. Let me tell you that. You can see the PE ratio right here again. The market cap as well, we have $343 billion dollars or kroners. I don't really know which currency that is in because it's not really listed. Yeah, we can go on to financials right here on Yahoo Finance, and we can see kind of the crazy amount of growth right here. Gross profit. You can see we had, what is that? That is in thousands. That is 4 billion of whatever currency this is in. That is in USD. 4 billion dollars in what is that? 2022, and so far this year in 2021 we have already made $12 billion. Come on, guys, this is 2 quarters in, and we've already made, like, what is that, 3x what we made the whole year of 2020. We saw in the previous earnings, we saw that the demand were high, and they I don't know if they hired their guidance for the next quarter. Whatever they did, they said that well, we expect this situation to last and it will continue, and yeah, kind of they could see that the situation continued, and that we would get even richer as shareholders of this company. So past performance also great, much better than this company right here, Costco. It's like, what is that, 11% higher or something like that. Scrolling down here to financial health, which is also important, you can see that their financial position checks all the boxes. They are really just, all that debt is under control. Short term and long term, it is all covered. You can see this crazy amount. You see long term, you know, they have $14 billion in liabilities, which is expenses and loans and stuff like that, and they have assets, capital on hand, 43 billion. Come on, that is covered like 3 times from just that, and short term they also cover it almost double. So you can see it's just a flawless balance sheet, as all of the analysts, they say it's a flawless balance sheet. Their debt is very nicely, you know, 14% debt to equity. Come on, 14% debt. This company are buying humongous ships with 1,000, 10,000, 20,000 containers on top of them, and they have a 14% debt to equity ratio. They have so much equity, they have so much cash that they can just, yeah, they are rich. And I'm just going back and forth between its biggest competitor and this company, because I just want to showcase how much better this company is than Costco, which is getting all of the attention. So we have a 2% right here. Dividends, this one has apparently a 3%, but you can see the dividend has not really been there. It is only now where it actually is beginning to pay out dividends. It has never paid out dividends before, and Mrsk has a much better track record. They usually pay out 1.5 to 2% dividends. They have done that for the past probably like many decades, but much more sustainable, which means that although Costco's are a little higher, then this is much more sustainable, which is much better. So it is also well covered by what is that, cash flow earnings, because they are basically rich in this company, and the management is really one of the most important things here. Some people underestimate the management team and what they can do for a company, and in this case we are great, because you can see here the management team is well tenured with an average 2.4% average tenure. That's a great word. And with this one we have an average tenure of, what is that, 0.8 years right there, 0.8 years. This management team is very inexperienced management team. Board of directors are basically crap as well, and they have a great board of directors. This is what rules the company. It doesn't matter how great the balance sheet is, if the board of directors are just burning cash on random things and can't get some nice return on equity and capital and all these things. What are we gonna do, guys? We're going broke like a broker. But with Mrsk, we are simply having a great tenure right here. The CEO is great. The CFO is great. Yeah, you can see the holdings right here, and really there's not much more on this site to see. We can take a look at this. We can take a look at the price of Mrsk. If that is something you're interested in, I can just take it in. What are you? You're using USD. You're one of those USD users. Well, then we can take a look at that. Sorry, that is not coming in here. What are we doing here? That is not USD. Well, anyway, it is listed on multiple stock exchanges, like 10 or 20 stock exchanges. So it's no problem. Yeah, the stock went up like 3% today. You can see that is kind of reaching an all-time high right there. But don't fear that, because Costco also has a humongous all-time high right here, which doesn't matter. Come on, it's a great company with which doesn't matter, because crazy value, man. This stock right now, this is of course in another currency, which I can't figure out how to set to another currency, but oh, I probably have to find the ticker symbol. Never mind. But this stock belongs in over 40k in Danish crowns per stock. So yeah, we have a long way to go, and it has taken. Look at this. It was at like, what is that, 5,000 kroners, and now it has boomed up from its what is that, 2-year low or something like that. 240%. Man, it is just this crazy amount of supply chain issues we have, which has just given this company a great way to really just make some money. So that is pretty much all I have to say about this company. If you enjoyed this video, please, oh sorry, I just have to go out here. Please like and subscribe. And with that said, I hope that you now have seen the true wonders of Mrsk, and you have really gotten to taste some of the really nice flavors that this company has to offer. And with that said, I hope you have a great rest of your day, and until then, peace out like crazy. Yeah.